Today is Monday, September 26th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, ADMIS Vice President of Grain Research, and Alan Bush, ADMIS Senior Financial Economist. Started with the grains this morning, Steve. Grain futures dropped last week. Why, and do you think this trend will continue?
I think it was a reaction to a lot of different things. I think that our export sales data was disappointing. The Ukraine corn, South American corn, Russia wheat, South American beans, meal, and oil are all cheaper than us. And I think that China continues to struggle with their economy, and that reduces their raw material inputs. We also see the dollar making new highs for the move, which hurt all commodity prices. And I think the market is concerned that as we get into harvest, we're going to see more pressure on the futures. And I do think it's going to continue. I think we could trade below $14 in the nearby beans. I think we could trade below $6.50 in the D's corn, and maybe closer to $8.40 in the wheat as we get into the harvest lows. Wheat market's probably the one that's probably most undervalued, given some of the Russian situation about possibly using nukes and just how much wheat can be exported out of Russia. So I think there will be a post-harvest rally, but I think right now the direction of the prices are lower.
Steve, you mentioned the dollar, the strength of the dollar. I think that's a good chance for me to break protocol here and jump over to Alan. Alan, British pound is a record low today against the dollar as well. What's the significance of this, and what do you see with the dollar here moving forward?
Well, the significance is that a lot of currencies against the dollar are, as you mentioned, the pound at a record low, the yen at a 24-year low, the euro currency at a 20 or 22-year low against the dollar. So I think what we are seeing is all of this dollar strength precipitated by the Fed that is very hawkish, more hawkish than other central banks. And I would not be surprised that with the volatility in the currency markets that we have seen in recent days, that some of these other central banks may be a bit unhappy with the Fed for raising rates as fast as they are. They may be leaning on them to one degree or another, to whatever extent they can. I'm not sure how much they have an influence, but I think they might be communicating their displeasure with the aggressive Fed. And it could be that down the road, later this year, this could result in the Fed being a bit less hawkish, with central banks, I think, very unhappy with the interest rate differential advantage that the dollar has currently.
Thanks, Alan. Steve, turning back to the grains, Friday we have a USDA report. What do you think this report will say, and how might it impact prices?
Usually this report does not have a lot of impact on price. It's the end of carryout for 21-22 for corn and soybeans. But with the basis as high as it is, there is a chance that if they come out below the average trade guess, we could see a pretty sharp rally in prices. But on the other hand, if they come out above the average trade guess, you could see us make new lows for the move.
Finally, Steve, how about providing us with the latest weather and its potential to move grain futures?
Well, Mother Nature has flexed her muscle in the last couple of weeks with floods in Pakistan. Now you had floods in the Philippines. There'll be flooding in Vietnam and Thailand, especially in Vietnam at the key export ports they have. We have record drought in central China. Dry conditions continue in the U.S. Southern Plains, and you're going to see a lot of wheat planted for next year in dust. You've got a hurricane now heading for Florida that will move up into parts of Georgia with flooding rains and wind damage. And then you have some cold weather in Russia, dry weather in Ukraine, and Argentina continuing its worst drought in 30 years. All these things add to supply concerns for 2023, which could be friendly to prices. The only problem is when you have a global recession, demand might come down just as much.
Speaking about global recessions and some of the products, the industrial commodity markets, Alan, should be affected by recession. What is your outlook on industrial commodity markets right now?
Well, I remain bearish basically across the board on the industrial commodities. That would include crude oil, gasoline, copper, and lumber. So it does appear that the global economy is weakening, and even Bank of Japan Governor Kuroda said that there is a possibility that the global economic slowdown may be increasing, and I would not be adverse to that belief. So I would look for lower prices really in all of the industrial commodities, maybe at a somewhat slower pace, but lower prices I think are likely nevertheless.
One final question, Alan. The stock market has taken a beating here over the past couple of weeks, specifically the S&P. Where does the next support level lie?
Okay, the next support is at 35.87. But one thing to look at in addition is anytime markets are extremely volatile, and that is really what we're seeing right now, and not just in the stock index futures, but also in the currency markets, this kind of volatility quite often at some point could precipitate some type of policy changes. And I think that could be something to look for down the road as far as maybe a less hawkish Fed, as I mentioned. And that could indicate that we may be close to a bottom in stock index futures. If the Fed is, to one degree or another, influenced by other central banks, or even maybe a drop in inflation, to be a bit less aggressive in hiking rates.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests, should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.